Welcome to the Ultimate Property Management Virtual Masterclass Part 2, brought to you by Real Estate Investor. Today's masterclass is officially sponsored by We Connect You, developers of intelligent property management software to enable you to scale and deliver more value to your clients. The topic for today is setting yourself up for a seamless audit. So please welcome Elize Wilson.
Welcome, everybody. Also, a thanks to We Connect You and Ray and all the panelists making this masterclass possible. We are going to look at how to set yourself up for a seamless audit. Now, audit and seamless doesn't seem to go together, but it is possible. In this session, we are going to look at what is your responsibility as an estate agent, what is your risk, what is your auditor's responsibility, and how can we join hands in partner together to address all of these risks. Now, Section 1 of the EIB Act defines any person for gain on his own account, directly or indirectly, or advertised to act in the instruction of other person to sell or purchase immovable properties, let or hire immovable property, or collect or receive monies on account of a lease or immovable property. This will then include if you manage sectional title schemes and also if you manage homeowner associations. Now, the Act continues in Section 29 and 32, placing the responsibility on the estate agent to have his business account and trust accounts audited, to have Section 32.1 and 32.2 accounts audited, and then also, very important, to have your accounts, your audited financial statements and your EIB audit report submitted at the EIB within 4 months of your financial year end. Now, it is very important that this is done because the disqualification process starts immediately if your report is late, and can cause significant delays in obtaining your EIB certificate. Now, the EIB audit report further continues to place the responsibility on the estate agent to implement proper accounting and internal control systems to prevent and detect errors and fraud. And then also by listening to Marlon, I really got scared on behalf of the property owners. I think it is really important for estate agencies to do a proper assessment of their risks and also to look at how the auditor can assist them. The estate agency also have a responsibility in terms of the audit of the financial statements to prepare financial statements and have them fairly presented in terms of the accounting framework, and then also to ensure compliance with the Company Act, to ensure that proper systems of internal controls are implemented to prevent and detect errors and fraud, and then to confirm that they continue to be a going concern within the next 12 months. Now, as you can see in the previous slide, the report that you need to submit to the EIB require you to ensure proper accounting systems and internal controls. And then also having your financial statements audit also again want you to have those systems of internal control implemented. Now, why would the estate agency require all entities to be audited? I mean, the Company Act might not require you to audit if your PI scored less than 100, or you are sole proprietor, then again, you don't need your accounts to be audited. However, because an estate agency holds client money or trust creditor money in fiduciary capacity on behalf of third parties, the EIB was enacted to protect the general public, and the Act is also providing a mechanism to regulate this. Further, these trust creditor accounts can be quite tricky. You have a property which you manage on behalf of your landlord or your investor, and that investor will need a statement with certain information, and you will also have a tenant for whom you need to send a statement, and also inside of these statements are certain non-cash transactions, and then the Act come and say, but your trust creditors must balance your cash in bank. You can never have a negative trust creditor, and should that happen, you sit with the problem that you are not complying with the Act, and your auditor have to qualify the audit report, and then there can be further investigation from the EIB. So that makes it a bit tricky to manage, because they can, there's a lot of instances that, or transactions that goes on between the trust creditor and the tenant and the landlord, and then there will be journals. They can all various type of transactions on the backside that can cause this balancing act to go out of or become a problem. Now, saying that, let's just quickly have a look at what the typical risk is that an estate agency can face. And number one, I've put it on here, is that you have a large volume of small transactions. Now there's expenses, maintenance, water and electricity. The municipal account will be split. Maybe the landlord is responsible for the rates and taxes, whilst the water and electricity need to go to the tenant. So there's a lot of small different transactions that need to be allocated properly. And if it's not managed properly, it will obviously result in your trust creditor balance not being correct, and that can cause you to pay out money to your landlord, and again your trust creditor is in a negative, or it can maybe result that you pay expenses on behalf of the tenant and or for maintenance, and again resulting in your trust creditor going into a negative. Now, in order to assist, because I mean it's impossible for each estate agent to look at every transaction and make sure it's correct, so you need to appoint ethical, skilled staff who process these transactions. And then not just that, you also need to have levels of segregation of duties. Now, in your organization, you might not necessarily always have the organizational structure or the staff to have staff that process, staff that review, staff that authorize, all that different levels of segregation. But luckily, there are service providers such as We Connect You who can assist with bringing in such an extra layer to help you meet that obligation. Then the other risk is then the shortfall. Your trust, there's a shortfall between the cash in the bank and what your trust creditor should be. There can be instances of fictitious creditors. And then there's also the risk that you charge commission, which you're not authorized, or which you don't have a contract or written mandate to do so. And then there's the other practical issue, and that is sometimes, or I think in a lot of instances, there's money coming into your bank account which you cannot allocate because the descriptions aren't sufficient. So that also have a practical implication, because now you sit with this reconciling on your bank account and you don't know where to allocate that. Mostly these are accounted for in a suspense account, and from an audit perspective, the auditor will appreciate if you can have a list of all these, as difficult as that can be, but have a list of all these transactions, all the individual transactions making up that suspense account. And then, you know, it's easy to trace if somebody comes and have a claim, and then you can allocate it out of that account. The other problem is that that money can sit in that suspense account for many years, building up to a large sum. And from an audit perspective, there's not much, there's no guidance in the legislation at this point So that money basically must just be kept safe, and maybe you can have a discussion with the EIB on how to deal with that. But I think from an audit perspective, it's just good that you have a reconciliation making up each of the individual transactions. Okay, I think we've looked at how we can mitigate some of these risks, but also you can appoint ethical and skilled staff. You can implement proper systems with proper levels of segregation of duties. And then also to ensure or have policies in place to ensure that whenever reconciliations are reviewed, that they are matched with original supporting documentations and not copies of supporting documentation. I've seen in practice where there was some fraud or theft in estate agencies where some of the accounting staff will use various different expense claims and roll it from one trust creditor to another and then pay that money into her own account. Now, by working on original supporting documentation, whoever review the reconciliations have original or authorized payments, have original support, which they can sign off, and that document cannot be used again in another trust creditor. Ensure you work on original supporting documents. We've discussed that. Subscribe to a service provider such as WeConnect. We've discussed that. Have your accounts annually audited. I mean, the Act require that. And your auditor will also assist you greatly with your responsibility in terms of your internal control systems. We look at that now, and then also discuss with your auditor weaknesses and identify during the audit and some recommendations on how to improve that. Now, your auditor will, as part of the audit process, assess the risk of possible fraud within your system. They will obtain an understanding of your internal controls, and then they will evaluate the appropriateness of the accounting policies of your financial statements, assess and conclude on the going concern of the company, and then report weaknesses or error and fraud, if any, were identified. Now, further responsibility for the auditor in terms of the audit of financial statements is the auditor will give a reasonable assurance opinion. Now, that doesn't guarantee that there's no misstatements, but the auditor will at least have selected all material transactions in your general ledger and verify that that is appropriate. The auditor will also do further selections of transactions and make sure that they comply. Then the auditor also needs to submit an EIB audit report with the financial statements to the EIB. Now that agreed upon procedure audit report that the auditor need to do additional audit work on consists of a part A and a part B. Now part A is more a set of procedures that needs to be performed to ensure compliance with section 32.1, 32.2 and 32.3. And then we also need to check that your trust accounts are balanced monthly, your trust account never went into a negative, all trust accounts of the business are listed in that report, and we obviously need to verify that information. And then if there was any qualifications, in other words, if we find that there was any contradiction in the Act, or let's say, for example, a trust creditor went into a debit, or your trust creditors and bank doesn't balance, or any other non-compliance with any of those sections, we need to then qualify that and report it in this agreed upon report. In part B of the report, we will look at your valid Fidelity Fund certificate. We will look at that you have a valid FIC registration number. We will verify the total interest and ensure that whatever funds needs to remain in terms of express mandate, that is deducted, and then that 50% remaining was interest remaining was paid over to the EIB. And then also there is we will report that we did not verify any cash receipts over 25,000. Now, the 25,000 can also be made up of various smaller amounts from that same, let's say, tenant. If that also add up to 25,000, you also need to report it to the FIC. And we've recently seen a client where these type of cash receipts came in, and unfortunately the client didn't know that they have to report this. He immediately put in places, immediately reported it, and put in systems to ensure that they do meet that reporting obligation. But please bear in mind that from an audit perspective, if we pick up something like that, it is a reportable irregularity, and we have to report it to IRBA, which is our regulatory body, and then they report it to the relevant parties. Okay, the auditor further have the responsibility to submit these audit reports on the EIB Audit Portal. Now, the EIB Audit Portal is the official space where your audit information can be submitted to the EIB, and I don't think they really accept any other forms. However, I suppose you can contact them and get some more info on that. Once we log in our audit portal, we get a questionnaire that we need to complete. Obviously, we need to link with the estate agency's EIB PIN. And please ensure that you have that PIN readily available. The auditor will not be able to submit the report. And it is sometimes very difficult to get that PIN from the EIB close to the financial 30 June, because it is a really busy time. Everybody's loading up reports. So make sure you have that EIB PIN ready for your auditor. And part of these questions that we need to complete is whether there was a audit in any of the audit reports. Then when we finish the completion of that questionnaire, we also then have to upload the audited financial statements. We need to upload your EIB audit report. We also need to upload your IT3B for each trust account. And then if you use a service provider like We Connect You, you also need to upload your AUP report. Now, remember, it is the principal of the estate agency's responsibility to ensure that the audit reports are submitted on time. So make sure you give your auditor sufficient time. It is really difficult if you have a February year end and your audit report needs to be submitted by end of June. If you only get the accounting records in June, then you place a lot of stress on the auditor, or very few time for the auditor to do a proper audit, and then there's time constraints because you also need to sit down and have your discussions with your auditor and so forth. We've already discussed that late submissions can cause delays in your Fidelity Fund certificate being obtained. And then once we've submitted this report, we get a confirmation back from the EIB saying that they've received your report. So please make sure you get that confirmation from your auditors as well. So in order to assist your auditor with this process, you can have an audit file ready for your auditor. And in that audit file, you can include your Fidelity Fund certificate, You can include proof of your FIC registration. You can include your AUP that you received from your Reconnect or other service provider if you use any. You can already include your bank statements of your trust and your business account, your IT3B certificates, which must also be uploaded on the system. You can include your, well, that's probably going to be electronically, but you must have your general ledger for both your business and trust accounts ready, as well as the trial balances. And then, oops, there we go. And then once the auditor receives that general ledger, we will then make our selections of transactions, which I've already explained. All material transactions will be selected, and then we will make some further selections where we will test your sales with sales agreements, rental agreements. We will verify expenses with your expense invoices. We will also look at the payroll and commission supporting information and make sure that is correct. Your auditor will also have a discussion with you on your internal control systems to ensure, you know, there aren't any significant weaknesses that can cause error or fraud. And then if you have a service provider like Reconnect You, you can also give your auditor access to that portal. Now, on that system, we can then do our selections. We can, if you've uploaded your supporting information, we can immediately gain access to that and review that. And that can reduce a lot of hassle during the audit, where you need to go into your archives to obtain relevant information and so forth. So that can really assist you a lot. And we find that from our side, auditing in this way assists us also. I think, and from an accounting point of view, if you use a cloud-based system like Xero, that on that system, you can also upload your supporting information. And we can, from the transaction, go to the supporting information and verify it there. So let's recap. Your audit actually starts on day one of your financial year end. You need to continuously make sure your accounts are up to date, upload your supporting documentation for your transactions on your cloud platform or accounting system. And then you need to reconcile your accounts on at least a monthly basis, and depending on how many there are, you can do it at more intervals. And then schedule your audit well in advance of your 4-month deadline. Also appoint a reputable auditor and ensure you have that discussion at the end of the audit with your auditor and getting some recommendations for improvements. And then at the end, you can then request proof that your audit reports was submitted. And it's as easy as pie. Thank you so much for listening, and I hope I could assist you in understanding better the processes we go through.
Great, Elize. No, that was quite involved, but I think it's very important and critical in terms of the rental asset management process. Thank you for that.